everybody, my name is Lena Inquest. So today we're going to be talking about income statement. So we've talked a lot about the concepts regarding income statement and what is in an income statement. So now today we're going to be looking through an official income statement graph for you guys to be able to demonstrate how an income statement table works. So starting off, we're going to be usually income statements are being recorded after annually or quarterly. So probably maybe every 3 months or every 4 months or half a year, but usually companies will consider annual income statement. Now, if you guys know how to do an income statement calculation, I think it's very easy, right? We're going to be taking the gross profit here, which in the scenario, we have $10,000. Wow, great job, right? And then we have a lot of other expenses to minus. Then we minus the tax, and then we have our net income. So let's do a little bit quick calculation time. We have our gross profit is $10,000. Great job. Now, general expenses, operating income, interest expense, and loss on sales equipment, we add these up together. So 2,800, right? So $10 minus 2,800, we would have this much left, right? No. So 0 minus 0, 0 minus 0, 0, let's borrow 1, minus 8 equals to 2, right? Then we add 1, we have is 7. So in the remaining, our net income for this specific one, our income before tax is $7,200. But now we're going to be talking about the tax. Now the tax is generally 30% of this, but let's calculate roughly the 30%. So let's say that the 30% of this is going to be $2,000, 2005. I'm just doing it in an easy way for us to demonstrate it out, okay? So minus, add a 1 here. Very simple daily calculation that we all do. 7, and then 4. So the remaining, our net income is $4,700. So here we have is $4,700. And you can see it's a very big difference between the gross profit and the net income that we earn in the final end of the day, right? So by looking through this net income statement, what do we get? First, we got all of the gross profit and the net income that we have. Secondly, we know the amount of percentage of tax that we need to pay. And thirdly, we know the amount of expenses that we have had. So now, what if I say that, oh, these expenses, why are they so expensive? We could actually look at into the income statement, look at what's missing, what's the logic gap, or what's something that you guys could improve so that these expenses will start to decrease, right? So when looking through this, you can see that the interest expense is $200, which is not that necessary, right? Or the loss on sales equipment, it could have been way much more cheaper, right? So when we actually think about next year's, let's say in 2026, these prices are reduced. So let's say the interest expense is only $100 and the loss on sales equipment is only $20. So that is when we could add in another $180 into our final net income company. It may be a small amount of money, but when talking about large business hierarchy, it's going to be way much more valuable. So that is why when we look through the income statement, we can know very beneficial information. The gross profit, all the expenses, taxes, net income, and also what we can improve. So at the end of the day, we can reach a better amount of money in total. Thank you for listening and goodbye.